Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 27th of August. I'm Daniel Lam, your host for the podcast. Earlier this week, we spoke about how the confluence of factors has been fueling the melt-up post-Jackson Hole meeting, which includes the resumption of Fed rate cuts in September, improving corporate earnings due to AI investments, and easing global trade tensions. There's also increasing hopes of a peaceful solution to the Ukrainian war. Momentum and technicals both indicate further risk on. Now, we've been highlighting that US equities positioning is relatively light versus 12 months ago. There is room for various types of investors to be increasing their holdings. For example, discretionary institutional investors have been raising their net equity exposure and cutting hedges. Call put indicators in US equities indicate that last Friday post-Jackson Hole was one of the strongest net buying flows year to date. There is still some room for such indicator to be rising higher before reaching last year's peak. What are the other sources of equity demand? Well, equity hedge funds and real money accounts are areas that can contribute to further upside, as are systematic strategies, because realized volatility is at historical low while momentum stays positive. In terms of risk, we'd like to highlight that US equities valuation is stretched. Slowing growth can cap further gains or at least slow the increase of exposure from institutions. Also, semiconductor heavyweights will be reporting over these 2 weeks. Now, major internet and technology companies that had already indicated strong spending on AI infrastructure in their earnings guidance. So this results in momentum investors being heavily long for semiconductor companies, and short interest is low. Thus, there is scope for hedging if the guidance disappoints. The key technical levels to watch for the S&P 500 is at 6,287, followed by 5,943. Now, if we break those levels, then we can see systematic or trend-following strategies turning to selling, and this can put a stop to the uptrend. However, given the confluence of factors we mentioned before, pullback is likely to be mild. That is all from me for today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.